We're very happy to be joined now by the author of The New Depression, the breakdown of the paper money economy, Richard Duncan. Richard, thanks for joining us today.
Thank you.
Now, we'll all be listening up to this one because obviously we've been in several cadences and several mutations of this crisis. Now, what do you think was the prime cause for getting us into this paper money drama, so to speak?
Right, I think in order to understand this crisis, it's necessary to understand the role that credit has played in bringing it about. So when we broke the link between money and gold 40 years ago, this removed all the constraints on credit creation. And afterwards, credit absolutely exploded. In the US, it grew from 1 trillion to 50 trillion, 50-fold increase in 43 years. And this explosion of credit created the world we live in. It created very rapid economic growth. It ushered in the age of globalization. But it now seems that credit cannot expand any further because the private sector is incapable of repaying the debt that it has already. And if credit now begins to contract, there is a very real danger that we will collapse into a new Great Depression.
Now, when one reads one's old Karl Marx, he said something, not in connection with gold, but he said something very similar. When the capital markets remove themselves too much from the real economy, you get into turmoil and a breakdown of the money system. Do we have to move, in fact, away? Do we have to break, or do we have to get back to a link between the real economy or gold and paper money?
Well, there's no easy way to go back to that link. And I think the Austrian economist, Ludwig von Mises, and they were very good in understanding the role that credit played in creating the crisis. As long as credit grows rapidly, that makes the economy grow. And however, the day always comes when credit can't expand any further, and then the new depression begins.
Now, that brings us back to the old discussion we had here with Roger before, that politicians, unfortunately, are scared of recession, never mind depression, and they probably won't implement any kind of policies that gets us back to reason, because one of them would include letting a number of banks fail, etc. So, to put it mildly, what is your conclusion? Where do we go from here?
Right, I think the thing that's driving government policy now is the belief that if they allow credit to contract, that we will have a new Great Depression. Milton Friedman taught Ben Bernanke that the Fed could have prevented the Great Depression if the Fed had prevented the money supply from contracting. But now credit is the new money, and if they don't prevent the credit supply from contracting, then we will have a new depression. So the policy is to ensure that credit continues to expand, and now that's what government debt is doing. The increase in government debt is making total debt grow. Otherwise, we would have already collapsed into a debt deflation death spiral.
Richard, first up, if I can take an issue with you about the name of the title. I was reading your book in a copy store on the weekend, and I swear everyone around me thought I was reading about mental health, the new depression, and it's certainly the big title out there. But it is indeed, a situation that almost policymakers are dealing with. How do you solve this? And it's almost like mental health in a way. This sounds like, if you think there should be further credit expansion, that QE3, 4, 5, 6, and forevermore is going to be happening in the U.S. economy as far out as we can see.
You know, we're in a very unfortunate position to be here on the teetering on the verge of a new Great Depression. But this explosion of credit has created a kind of new economic system. I call it creditism. Now, creditism creates great perils. If it begins to contract, we will collapse. But it also creates tremendous opportunities. And the opportunities we're overlooking. The opportunity is our governments have the ability to borrow massive amounts of money at just 1.5% interest. If they borrow aggressively and invest this in transformative 21st century technologies, they could actually generate enormous investment returns and new technologies that would end this crisis and, in fact, bring about a technological revolution that would improve the well-being of everyone on this planet.
Roger, come in here.
I agree. I mean, I think Friedman was right in a sense. If you could have kept the credit growing, you probably could have prevented depression. They didn't, and why didn't they? I have to say, this is the question which I find amazing, because people don't ask it. I think it was September, October of 29, the Fed raised interest rates very sharply and kept them high for 18 months or so. Why? At the time, inflation in America was negative. The balance of payments was in big surplus. The dollar was strong, and unemployment was higher than normal. Why did the Fed raise interest rates? Why? In 1989, the Japanese government also raised interest rates when it had the lowest inflation in the world, the best balance of payments in the world, the best currency, etc., etc. They both did this thing which they don't explain. I will give you an explanation, I think, which you may find acceptable. When you throw money into the system, when you increase liquidity hugely at a rate much in excess of the requirements of the real economy, you're trying to get people to borrow and spend. Actually, the good guys out there won't borrow and spend because they're too cautious. It's the bad guys who come in and borrow and spend, the misbehaviours, the malefactors. And when the Fed and the Bank of Japan in a later period realised that was going on, it said, we can't have that, we can't have that, that'll bring the whole system tumbling down. We must deal with that, we'll raise interest rates, that'll deal with the bad guys. And it did deal with the bad guys, but it flung the world economy into depression. And that, I think, is the big threat now. We could probably have QE 3, 4, 5, 6, 7. We could keep deferring the depression, but that will just encourage the bad guys. And there's lots of bad guys around. We can see them all over the place. We know they're there. And if you do encourage those guys, you do possibly more harm than good. And at some stage, the central banks, particularly the good central banks, the Bundesbank, for instance, when it gets its independence back, is going to raise interest rates and take the credit out. And when that happens, we go willy-nilly, and we can't prevent it, into depression. And I think you just simply can defer, but you can't prevent. The depression, and I agree with you, there's going to be a depression. It might start next year, it might start the year after, might start in 5 years' time. But we can't prevent it. And probably, the more you defer it, the worse it's going to be. Yes.
Well, the thing is, after a 4-decade, $50 trillion expansion of credit, if this credit bubble pops, the depression is going to be so severe that I honestly don't think our civilization could survive it. Therefore, that's why I'm proposing such radical solutions. Let's have the government borrow trillions of dollars and invest in renewable energy, in genetic engineering, biotechnology, nanotechnology, create new industries so that trade comes back into balance, new industries that the government could tax, new products like a cancer vaccine that the government could sell to bring down its budget deficit. And in that way, we can keep the credit growing, and we can restructure the economy, and even if every last cent of this money is wasted, in a worst-case scenario, at least we would have prevented a depression for another 10 years, and we could have enjoyed this prosperity for another 10 years before our civilization collapses.
Richard,
with the bad guys actually running all the money. That's the trouble. That is the trouble.
Gentlemen.